G'day and welcome to this week's video. This week I thought it was worthwhile touching base on the volatility we've seen in recent times. So we've gone through a period of quite strong markets, particularly in the US, have been very buoyant. It's been a lot of great earnings growth for a lot of really high quality businesses over there. But we're seeing a increase in the the bond rates, which then affects the pricing of long-term assets like businesses that trade on the stock exchange. So with this volatility, we've seen obviously some very sharp declines in 1 days, which has obviously transpired over here in Oz as well. And along with that volatility, as always, we get a myriad of experts coming out with very short-term predictions. And obviously, the media is looking for these expert opinions as bad news makes good headlines, and so the whole event very much gets quite sensationalised and sometimes ignores the fact that the market has had actually quite a good run up to this short and sharp correction. Now, what's ahead of us? Well, I don't know, and I truly believe no one else knows what's going to happen in the very short term. And that's why I think it really does pay just to ignore the media and just treat it as white noise. But what the coverage can provide us as investors, and particularly those with cash, that the media pumps up the bad news, as it always does, so much that it can provide, obviously it scares people, and it scares people into to selling, fearing there's more tough times ahead. It can provide buying opportunities for those with cash. Now, we haven't done much recently at all, even given this sharp correction. That's because we've come off such a high base, so we really haven't done too much. But what we are still focused on is buying and building positions in very high quality businesses. Businesses in preferred sectors. There's some sectors we don't particularly like. We worry about retail. We think there's obviously issues there. We look for businesses with very strong balance sheets. So we like to see low debt or no debt, and in fact cash at bank and no debt is ideal. And we're particularly chasing growing revenues. We don't mind some debt if that debt is used to build revenues and therefore build the profit. So these times can provide us opportunity, but I'll encourage you to forget about the white noise in the background, the media that sensationalizes these corrections. Obviously, be aware of your own portfolio, review it regularly, but treat it as white noise. In the long term, the important factors of revenue growth and profit, that is what will drive the share price of any business. And we've seen that on the sharpest day down, which was Tuesday last week for us. We had some fantastic reports come out, one from Magellan, and that was a tremendous revenue growth and profit growth, but the share price was still down 6% in the day, which was just driven by the overall negativity in the market. So there's the opportunities that come up every now and then. I think they're a gift for us, and if you've got cash, it should be taken. Thank you for listening. Give us a thumbs up and subscribe to the channel. That'll be awesome, and we'll catch you next week.